warning signs aren't coming, they're already here. But most Americans are too distracted to notice. The stock market looks unstoppable, yet credit card debt just hit a record $1.4 trillion. Corporate profits explode, but millions can't afford groceries without a side hustle. The government keeps printing solutions, while the dollar quietly bleeds value every single day. It's the same calm before the storm that every empire has felt right before it collapsed. And if history is any guide, we're standing on that edge again. The warning signs are everywhere, but nobody wants to see them. Stock markets are hitting record highs, while unemployment quietly climbs. Corporate profits are soaring as ordinary workers get pink slips. Politicians promise prosperity while the foundation cracks beneath our feet. We're living through the opening act of an economic collapse, and most people are too busy watching the show to notice the building is on fire. This isn't about distant theories or academic models. This is about what's happening right now in 2025. As the American economy stumbles toward the edge of a cliff that most experts refuse to acknowledge. The numbers don't lie, even when the headlines do. And if you understand what those numbers really mean, you'll see that we're not just heading toward a recession. We're already living in the early stages of something much, much worse. The illusion of strength is the most dangerous economic lie of all. We measure success by stock prices that float on a sea of printed money. We celebrate job reports that hide mass layoffs behind seasonal adjustments. We trust institutions that have spent decades hollowing out the very foundations they claim to protect. But illusions always shatter. And when this one breaks, the debris will bury everyone who believed the performance was real. Here, that's what the mainstream media want to tell you. The United States economy is growing. It's consuming itself. The jobs being created are low-paying service positions that can't replace the manufacturing jobs being destroyed. The wealth being generated flows upward to asset holders while wages stagnate and prices climb. The government spending that props up our so-called growth comes from debt that can never be repaid. We're watching a controlled demolition disguised as a construction project. The labor market tells the real story if you know where to look. Headline unemployment sits at 4.3%, a number that sounds manageable until you dig deeper. More than 1.9 million Americans have been unemployed for at least 27 weeks. That's the highest level since the pandemic and double what we saw just 2 years ago. These aren't people just between jobs. These are people the economy has abandoned, perhaps permanently. What makes this terrifying is who's being left behind. College graduates now make up over 30% of the long-term unemployed. These are people who followed every rule, earned degrees, and built careers, only to discover that automation and economic restructuring have made their skills obsolete. When the educated middle class can't find work, the foundation of consumer spending collapses. And when consumer spending collapses, everything else follows. The corporate world is sending signals that should make everyone nervous. Amazon announced 14,000 job cuts in a single week, citing artificial intelligence as the reason. EOP's eliminated 48,000 positions from its workforce in just 1 year. These aren't struggling companies making desperate cuts. These are profitable giants reshaping their operations around machines instead of people. The message is clear. Human labor is becoming optional. Since January, over 4,200 companies have announced mass layoffs. That's not a recession pattern. That's a fundamental shift in how the economy operates. Companies are discovering they can maintain or even increase profits while employing fewer people. Technology isn't creating new jobs to replace the ones it destroys. It's concentrating productivity into fewer hands while leaving millions without income or purpose. The federal government is making the situation worse through its own workforce reductions. Nearly 300,000 federal civil service positions have been targeted for elimination, with almost 200,000 workers already gone. These cuts ripple through local economies, especially in regions dependent on government employment. When federal workers lose their jobs, they stop spending at local businesses. When those local businesses lose customers, they cut their own staff. The downward spiral accelerates. But the real economic bomb is the tariff policy that's reshaping global trade. The United States now faces its highest tariff levels since 1933, with an average rate of 18.6%. These aren't just numbers on imports. They're taxes on every single American household. estimated to cost families nearly $1,300 this year alone. This burden falls hardest on working families, who spend the largest portion of their income on goods that have become more expensive overnight. Manufacturing is collapsing under the weight of these trade policies, for straight months of manufacturing job losses paint a picture of an industrial sector in freefall. Companies that built supply chains over decades are watching them disintegrate as tariffs make their operations unprofitable. The automotive industry reports billions in tariff-related costs that eventually get passed on to you, the consumer, through higher prices. This creates a vicious economic cycle. Higher prices reduce consumer spending power, reduced spending forces businesses to cut costs through layoffs. More unemployment means even less spending. The spiral feeds on itself until something breaks catastrophically. We're seeing the early stages of this process play out in real time. The Federal Reserve finds itself trapped. If they raise interest rates to fight inflation, they risk pushing the economy into a full-blown recession. If they cut rates to prevent a recession, they risk making inflation even worse. The central bank's traditional tools are useless when the problem isn't just supply and demand, but a fundamental restructuring of the entire economy. Meanwhile, financial markets are living in a fantasy world, completely disconnected from reality. Stock valuations are matching the levels seen during the dot-com bubble, or corporate bond spreads are near all-time lows, suggesting investors see no risk anywhere. House prices remain at record highs, while the number of unsold homes is building to levels we have seen since 2009. This disconnect between asset prices and economic fundamentals has reached dangerous extremes. Regional economies are already showing signs of serious stress. States representing nearly one-third of our national economic output are either in recession or at high risk of entering one. California and New York, the economic powerhouses that drive so much of American growth, are struggling to avoid contraction. When these states fall, their problems will spread nationwide through our interconnected financial and trade networks. History shows us that economic collapses don't announce themselves with dramatic headlines. They begin with subtle shifts that most people ignore until the damage is irreversible. Employment patterns change, trade relationships break down, asset prices lose their connection to reality. This is exactly where we are today. The most dangerous part is the widespread belief that someone else will fix it. Politicians promise solutions they can't deliver. Central bankers claim they have tools they don't possess. Everyone assumes the system will hold together because it always has before. But systems don't survive on assumptions. They survive on fundamentals, and our fundamentals are rotting away. The banking sector is showing cracks that should terrify anyone who remembers. 2008, financial institutions are caught in a squeeze between rising loan defaults and shrinking profits. As unemployment climbs and businesses fail, banks are facing mounting losses. The private credit market, which has exploded in size, represents a massive blind spot. These less regulated lenders don't have the reserves to weather a storm, yet they've become critical sources of funding. Consumer debt has reached unsustainable heights. Just as incomes stagnate, households are facing the impossible choice between making payments and covering basic expenses. Credit card delinquencies are climbing, auto loan defaults are accelerating, and mortgage stress is building. The consumer spending that drives two-thirds of our economy is about to crater as families exhaust their savings. The housing market is another disaster waiting to happen. Prices remain near record highs, while demand evaporates. New home inventory is piling up, yet builders continue to construct properties they can't sell. Mortgage rates have made homes unaffordable for most buyers, while existing homeowners are trapped in properties they can't afford to maintain. The wealth effect that drove spending is now reversing. What we're witnessing isn't a temporary downturn. It's a structural transformation destroying the economic model that built the middle class. The jobs being eliminated aren't coming back. The industries being automated won't rehire. The collapse isn't coming, it's already here. It's unfolding in statistics and policy decisions that most people don't see. By the time the crisis becomes obvious to everyone, the opportunity to prepare will have passed. The question isn't whether the economy will collapse, but whether you'll be ready when it does. Thank you for watching. If this information was valuable to you, please consider liking this video and subscribing to the channel for more updates. Stay informed and stay safe. Have you ever felt like the ground is shifting beneath your feet? Like the rules of the game have changed, but But nobody gave you the new playbook? You're not just imagining it. What we're witnessing isn't just another dip in the market. This is different. This is a comprehensive, system-wide breakdown, and it's happening right now. Let's start with the policies coming out of Washington. They tell us they're helping, but who are they really helping? They propose tax cuts that mostly fill the pockets of wealthy investors, while working families are watching their jobs disappear. They create new regulations that crush small, struggling businesses, but do nothing to fix the deep structural problems that are gutting the middle class. It feels like every solution they offer just pours gasoline on the fire. The supply chain chaos, we were told, was temporary. It's not. It's becoming a permanent restructuring of the global economy. Companies that spent decades building these incredibly efficient, just-in-time global networks are now watching them crumble under the weight of trade wars and constant policy whiplash. Those systems that maximized profits in stable times have become catastrophic weaknesses. Businesses are finding out the hard way that you can't just flip a switch and rebuild the domestic production capacity that was dismantled over generations. The industrial heartland is feeling this in its bones. States like Michigan have officially tipped into recession as the auto industry gets hammered by tariffs and rapid technological shifts. Ohio and Pennsylvania aren't far behind, with steel and manufacturing plants becoming unprofitable overnight. And these aren't temporary shutdowns. We're talking about permanent closures of facilities that employed thousands of skilled workers who now have nowhere to turn. This isn't just about the factory jobs, though. The ripple effect spreads through entire communities like a slow-motion tidal wave. When a major employer shuts down, it's not just those jobs that are lost. It's the local businesses that relied on those workers' paychecks. The restaurants, the corner stores, the service providers, they all start to dry up. Property values plummet as people are forced to leave, and the local tax base shrinks, leading to cuts in schools and public services. It's a vicious cycle that makes these communities even less attractive for new businesses or residents. At the same time, healthcare costs are skyrocketing, just as millions lose their employer-provided insurance. Families are being forced to make impossible choices between paying for medical care and paying the rent. Our emergency rooms are filling up with people who can't afford basic primary care. And mental health services are completely overwhelmed as financial stress pushes anxiety and depression to epidemic levels. The social safety net, already stretched thin, is starting to buckle under the strain. And the world is watching. International markets are starting to get nervous. The stability of the US dollar is being questioned as our economic weakness becomes undeniable. For decades, the US has enjoyed the incredible privilege of having the global reserve currency, allowing us to export our inflation and import cheap goods. That privilege is now under serious threat. Look at the energy markets. It's a mess of contradictions. Industrial demand is falling, but prices are still high because of supply chain issues and geopolitical instability. The agricultural sector is getting squeezed from both ends, rising costs for things like fertilizer and fuel, and falling prices for their crops as export markets close up behind tariff walls. Farmers are facing bankruptcy, and rural communities are collapsing, even as we pay more for food at the grocery store. Even the sectors we thought were immune are getting hit. The tech industry, once a symbol of endless growth, is announcing massive layoffs as venture capital dries up and consumer spending grinds to a halt. The AI boom that justified insane valuations is revealing itself as another speculative bubble. Silicon Valley is finally getting a taste of the harsh economic reality the rest of the country has been living for years. What makes this collapse so different, so terrifying, is that it's hitting every sector, every region, and every class all at once. There are no safe havens. The interconnectedness of our modern economy means a fire in one corner spreads everywhere almost instantly. This isn't coming in waves. It's a flash flood. And you can feel the psychological impact. When people lose faith in the system's ability to provide security and opportunity, they pull back. They stop spending, they stop investing, they stop taking the risks that fuel growth. That confidence, the invisible engine of our economy, is evaporating, leaving behind a paralysis that could last for a generation. Don't just take my word for it. The big financial institutions are sounding the alarm. JP Morgan is now giving a 40% probability of a recession by the end of next year. When the institutions that profit from optimism start preparing for a crash, you know the foundation is cracking. The U.S. economy is projected to grow at a pathetic 0.25% in the second half of 2025. That is growth. It's stagnation on life support. The manufacturing sector has seen 4 straight months of job losses. That's not a blip. It's the death rattle of our industrial capacity. Nearly a third of the entire country's economic output comes from states that are either in recession or right on the brink. When economic engines like California and New York start to sputter, their problems become everyone's problems. And the government's response? To cut 300,000 federal jobs in the middle of a downturn. It's economic malpractice. Each one of those jobs supports local businesses and services. Meanwhile, the labor market is deteriorating fast. High skill, high wage jobs in tech, finance, and manufacturing are vanishing, replaced only by low-wage jobs in hospitality and healthcare. This isn't a recovery. It's a downgrade of our entire economic model. We're seeing long-term unemployment spike among college graduates, shattering the myth that a degree is a golden ticket. Corporate America is showing us the future they envision. Amazon cut 14,000 jobs to replace them with AI. UPS dropped 48,000 workers in a single year. Through September of this year alone, we've seen nearly 950,000 job cuts announced. This is a fundamental, permanent shift in how our economy operates. This is a critical moment. It's time to pay attention, to understand the forces at play, and to prepare for what's coming. Because the world we were promised is not the world we're living in, and ignoring that reality is a luxury none of us can afford. Friends, let's have a frank conversation. Forget the headlines and the official narratives for a moment. Look around. Does it feel like things are on the right track? We're told the economy is strong. But what does that mean when companies are figuring out how to make record profits while employing fewer and fewer people? The market rewards efficiency, not our jobs. That's a fundamental truth we need to accept. Think about the small businesses in your town. The coffee shop, the local mechanic, the family restaurant, they are being crushed. Their costs for everything from ingredients to parts are skyrocketing, partly due to tariffs and supply chain chaos. At the same time, we're all cutting back on spending, so their revenues are plummeting. They're caught in an impossible squeeze. A large corporation can bleed money for a few quarters, but a small business? When their profit margin disappears, they disappear, and with them go the jobs they create. The very engine of our economy is being systematically dismantled. Now, let's talk about the banks. The official stress indicators say everything is fine, but that's an illusion. The financial system is far more fragile than anyone in charge wants to admit. Right now, there's a massive hidden risk brewing in what's called the private credit market. This is the shadow banking system that's exploded in recent years, lending money to businesses that couldn't get traditional loans. It's less regulated, less understood, and it's a house of cards. When these businesses start to fail, and they will, the losses will cascade through this opaque system, potentially triggering a credit crisis that could make 2008 look like a minor tremor. The banks that look healthy today are holding loans that will soon be worthless. When reality hits, the adjustment won't be slow and steady. It will be sudden and severe. And what about us? Consumer debt has hit a breaking point. For years, we were encouraged to borrow against rising home values and the promise of stable jobs. Now, those incomes are stagnating. Jobs are becoming uncertain, and for many, home values are starting to slip. Credit card delinquencies are climbing fast. Families are making impossible choices: pay the credit card minimum or buy groceries, pay the car note or keep the lights on. The consumer spending that fuels 70% of our economy isn't just slowing down, it's about to hit a brick wall built of unsustainable debt. The housing market itself is flashing bright red warning signs. Prices are still stubbornly high, but demand is evaporating. Builders have so much new inventory piling up, it's starting to look like the eve of the last crash. Yet, they keep building because it's like trying to turn a giant ship. They can't pivot fast enough. The wealth effect that made people feel rich and spend freely is now running in reverse. Your home, once your greatest asset, could soon become a liability, trapping you financially and physically. This isn't just a national problem, it's a global one. The world economy is slowing down, and America's weakness is spreading like a virus through our interconnected trade and financial systems. Decades of complex supply chains are being torn apart by tariffs and geopolitical tensions. Countries that once looked to the US dollar as the ultimate safe haven are starting to have second thoughts. The special privilege that allowed America to live beyond its means for so long, our reserve currency status, is now under serious threat. When the world loses faith in the dollar, the consequences for our import-dependent lifestyle will be staggering. Take a look at the energy sector. We hear about high prices at the pump, but behind the scenes, something else is happening: demand destruction. As factories shut down and people drive less, our overall energy consumption is contracting. We have a massive infrastructure of refineries, pipelines, and power plants built for an economy that is ceasing to exist. These will become monuments to a bygone era of growth, stranded assets in a world of permanently lower demand. This crisis is also hitting America's heartland in ways many city dwellers can yet see. Farmers are caught between soaring costs for fuel and fertilizer and collapsing export markets due to trade wars. Many borrowed heavily against land that is now falling in value. Bankruptcies are looming. As farms fail, the entire rural ecosystem collapses with them. The equipment dealers, the banks, the small-town shops. We are witnessing the hollowing out of rural America on a scale we've never seen before, pushing more people into cities that may not have jobs for them either. And the bitter irony? We will see food prices climb, even as the people who grow our food go out of business. All of this economic stress creates a massive public health crisis. Emergency rooms are already overwhelmed with people who can no longer afford basic checkups. Mental health services are swamped as financial anxiety fuels depression and despair. The social safety net we thought would catch us is tearing under the weight of it all. An economic collapse is a health crisis, and a health crisis makes the economic collapse even worse. Here's the hard truth: the collapse isn't coming. It's already here. It's unfolding in slow motion, right in front of us. But we're clinging to the hope that it's just a temporary dip, that someone will fix it. The warning signs are no longer subtle. They are everywhere. From the for lease signs on Main Street to the stress you feel at the grocery store checkout. This isn't a future recession. This is the gradual disintegration of the system we were all raised in. The only question left is not if you'll be affected, but how prepared you'll be when the final illusion shatters. The time to understand what's happening and to prepare is now. Thank you for watching and for being willing to look at these difficult truths with me. If this resonated with you, please subscribe and hit the notification bell. Let's continue this conversation in the comments below. Stay safe and stay informed.